We're going to get started today by looking at the front page of Yahoo Finance. Um, okay, the interesting thing about this time of year is we get a lot of 13F reports coming out. A lot of the big hedge funds and mutual funds and companies that have a large amount of investments need to report their top holdings. And we see a lot of stocks popping today and dropping based on activity by some of the smartest investors in the world. So we see this article here, United Health stock pops on Buffett's Berkshire share purchase. So, all right, so we're going to go over some of Warren Buffett's purchases and in his disclosures and see if any of those make sense. Let me see. So this company has had a lot of bad news. The news has been really bad. The interesting thing about United Health is that it's in some of our top holdings in our most revered mutual funds. So let's look at the top holdings. Wait, we'll get there. There it is, right here. Let's look and see where UNH is. Okay. Well, it's been in the top holdings in some of our mutual funds we follow. And so whenever it drops like it has at the beginning of this year, sometimes you have to look at it to see if it has any credence as a long-term holding. And the thing, whenever Warren Buffett says a stock is gives his stamp of approval, that gives the stock market the ability to just buy it without even thinking, knowing that Warren Buffett is the best investor in the world. And that happened during the financial crisis whenever GE was and Bank of America were having some problems. He bought those stocks and put his name behind those brands, and that helped basically the stock market recover from the great financial crisis. And United Health has been um, in a crisis recently. They had a CEO that was murdered, and then they had a lot of government suing them for um, bad business practices. So it was a lot of negative news. But on the positive side, they do have the largest, um, they're the largest insurer in the country. So they do have scale. And okay, so let's look at United Health's fundamentals here. They're growing around 11% if you calculate this out. So the 11% and their PE is 16. So they're about 11% overvalued, but Warren Buffett's willing to pay just a little bit more for a quality company. And Warren Buffett likes to buy stocks that he can understand. And this is an example of he also bought some home building stocks. Home building are easy to understand also. You simply build the houses and you sell them. So let's look at where the S&P 500 is now. You can see that we have been above the 20-day exponential moving average, and we're bouncing basically on that average for the past since April. And we're right now, you can see that we're overbought, and we're also overbought on the S&P oscillator, which is at 3.0. That's a pretty overbought state. So there's a good chance we're going to go back down to this 20-day exponential moving average like we did back here. So we're overbought right now, and we're approaching one of the worst months of the year. So don't be surprised if we don't go back down to this 20-day exponential moving average. Um, let's look at the 10-year. The 10-year, the U.S. Treasury is in a downtrend. It's been going, you see, it's been going down in the downtrend for the past month and a half, but it's up today. Let's look at, okay, let's look at our calendar. Our calendar basically, we're almost out of earnings season. We have one more stock that's reporting in NVIDIA, the big stock. But for the most part, earnings season's over. And then we have September, which is traditionally not that great month. You can see that we have a green on our 15, this green highlight. That's an indication we have options expiration. And that means that on on the third Thursday of the month, sometimes we have a large amount of options expiring at the same time. That usually makes the stock market very volatile because in the options world, sometimes you have to cover positions if you have some options that are expiring, etc. There's a lot of forced buying, forced selling. So if the stock market goes up and down today, don't take it um, for anything more than it's going to be a volatile day. Expect that. All right. Let's look at the earnings for this week. We didn't have a whole lot of earnings from major companies. We have a lot of we have Cisco. They reported like inline quarter. Um, their stock didn't do much. And CoreWeave is a AI infrastructure build out play, and they reported and they went down a lot. We're going to go over a company called New Holdings. They I like fintech stocks a lot because they usually have um, low fixed costs and adding new customers, they don't occur a whole lot of um, costs involved. So Nucor reported, I'm going to go over their financials. They're actually growing at 40% right now, and they reported a really good quarter. And it happened to be on our stock um, screener for the past couple of weeks. And so I thought it'd be interesting to review that. All right, let's look at some of our numbers. We have momentum in the stock market. We have 60% of stocks over the 200-day moving average. And the stock chart looks great for the S&P. You can see we're bouncing along this 20-day exponential moving average, but we're overbought. So let's hope that it keeps holding on this level. Um, and that is basically momentum. The 10-year is up just a little bit this week, and the 2-year is up a little bit. So, but we're actually improving in our momentum, our amount of stocks over the 200-day and 50-day moving average. So that's going to help the whole stock market, every stock in the stock market go up because a rising tide floats all boats, they say. Um, we still have to worry about tariffs, that this is happening on a regular basis. Um, okay, let's look at August is traditionally a subpar month. So, and we're overbought right now. So there's a good chance we'll go back down to this 20-day. And we also have more volatility in August, September. So expect a lot of up and down in the stock market this month and next month. All right. And okay, so if we look at our S&P 500, we have like um, what's turning out to be a extended uptrend. We have an overbought situation in the S&P. So we're at the top of our range, overbought. It's not a good time to make new positions because most stocks follow the S&P 500 and we're overbought right now. Um, this is a time to either sell or not buy. The best time to buy is whenever the stocks are oversold, like right here, or right here, and right here. All right. Okay, let's look at the U.S. Treasury. I drew some lines this time. You can see that the purple line is the S&P 500. You can see they're going in opposite directions. So that kind of makes sense as the U.S. Treasury yield goes down. The um, it's better for businesses because there's a less cost in borrowing money, and so therefore the stocks go up. So that's the trend right now. Okay, let's look at some of our variables in the stock market. Okay, we have price of oil staying really low, around 63. That means the global economy is kind of slowing and not as active. Hold on. All right, and you can see the price of gold is down just a little bit this week, and inflation is pretty steady at 2.7%. So none of the variables are changing a whole lot. The US dollar, it's been going down. Let's look at the US dollar chart. You can see it's in a downtrend. Um, okay, fear and greed index. You can see we're at a greed level right now. So the translation is the greed level, caution, take some profits off the table or don't buy. Um, and so the AAII investor survey, oh, I missed that. Let's look at it. Okay, that is bearish. Oh, that's interesting. It's a contrary indicator. Um, we've been bearish two months in a row. So the translation for bearish is it's time to buy, don't sell. We have some contrary indicators. We'll keep an eye on that. But usually this matches up with CNN's fear greed index, but it doesn't this time. Okay, so you can see that we have 2 weeks in a row of bearish, and we had 4 weeks in a row of bullish. So let's see if that pattern continues. All right, for the VIX, it remains low, very low. It's at 14 right now. So there is basically no fear in the market. People are not buying protection. They think the good times are going to roll forever. Um, so that's an indication that the stocks will continue to go up. Okay, so right now in our investing mindset, we have delusion in the market. People are buying and they're excited. They have a new paradigm, AI perhaps, and um, we're approaching a time where we're going to be in denial. We'll go down a little bit during the summer months, and then we think we're going back to normal, and then we might have some capitulation. And this usually happens around September, October, because that's just the thing that's always happened in the stock market. Um, the only problem that may lead to a crash right now that I see is we have some tariff threats. Some good things for the stock market. We do have a Putin and Trump meeting in Alaska that might help end the war, and that might help the price of oil. Um, if they have a resolution to this war today, then the price of oil will go down in a major way because Russia will be able to sell their oil on the market again. Okay, let's look at, okay, so the P/E ratio of the S&P is at 27. That's like near highs for the past 100 years. So keep in mind that right now we have a premium in the stock market. And the way I approach this kind of situation is try to buy stocks that have a peg ratio of less than or equal to 1. Um, that could help whenever you're buying individual stocks. Because right now this is pretty high. Okay, let's look at our first to worst from this year. Last year, we had IT, communication sector, and consumer discretionary up the most. And this year, they are actually up again 16%. Consumer discretionary is underperforming, maybe at 1%. Um, but we have industrial still up 14% and utilities up 13%. S&P is up 10%. So the one laggard is healthcare and energy. Healthcare is actually starting to outperform this week. No, it's starting to do a little better. And we have energy, which can't get out of its own way. It is at 0% for the year. And energy is highly dependent on the price of oil, and oil prices have been down. So even if you buy the best energy stock, if the price of the underlying commodity is not going up, the stock is not going to go up either. So that makes it a little hard to invest in energy companies for consistent returns. All right, let's look at the PE valuations relative to history. This has changed a little bit since last week, but we see IT is at the 95th percentile, means it's very highly valued at a 30 PE compared to 15 PE over a 30-year period of time. Let's look at consumer discretionary is also overvalued. Industrials, S&P also up, overvalued. But the ones least overvalued are energy, healthcare, financial, and real estate. Okay. All right, let's look at some of the sectors going up and down in our charts. Okay, so let's look at our 10-year is going up. Okay, so anything affected by borrowing money, let's look at our cheat sheet. 10-year is going up. That's this one here. Positive for large cap stocks, financial sector, insurance companies, and for negative for small cap stocks. They need to borrow money, heavily indebted stocks, high yielding stocks, because as the price of a guaranteed investment goes up, people are not reaching for higher yield. So let's look and see if that happened today in the sectors. Okay, so the semiconductor is down the most today. Technology is down. The ones up the most are gold, healthcare. Healthcare is up because United Health is up, perhaps, but it does pay a dividend. Uh, energy is up a little bit. Okay, this isn't following our pattern we just followed there. Real estate, we expected real estate to be down because the interest rates are going up. But we did have Warren Buffett buy some of the real estate companies that are building houses. So that could really have helped the housing sector today. Um, okay, so we can't make any we can't get anything from this today. Okay, let's look at the market movers. Okay, United Health, we just talked about that. It's up 13%. Intel, the government, there was news that the government might be investing in Intel. And the last time the government invested in a company was MP Materials. It went up 20 or 50%. So this is an example of a stock. The interesting thing about Intel is if we have some kind of protracted war, if there's a problem in Taiwan where Taiwan Semiconductor can't make chips, this company will be crucial for the United States. And that's why the government, I think, is investing in it now. So this could be whenever this gets back down to 20, this goes back up and down from 20 to 25 on a weekly basis. When it gets back to 20, I'm going to look at it as a possible contrary play it's not doing good financially right now. But if it has the backing of the government and investments from the government, it very well could be a good investment. Let's look at some more of these. Healthcare. Okay, all these are going up because United Healthcare went up. Molina, Elevance, they're all, it's in sympathy because Warren Buffett's buying UNH. Okay, we also have, okay, let's look at some more stocks. We have the ones going down. AMAT, they had a bad earnings report, so all the semiconductors go down with Applied Materials that did had a bad report. So, okay, a lot of these are high-flying semiconductor stocks that went up a lot, like 30, 50% recently. All right, that was a good little excursion. Let's look at Dan Now's picks from the beginning of the year. You can see Cisco is up 17%. That is an awesome pick. And his bank ETF, his big bank ETF is up 14.8%. So both of those have been really good choices. And his worst choice was IJJ, the mid cap ETF. It's only up 2%. And if you bought cash, if you had cash at the beginning of the year, this would end up being a bad investment. Um, he might have used this during the April um, lows whenever everything was selling off. That could have been a good choice, but not holding cash all year long would be a loser proposition because the dollar is going down and the stock market is up 10%. So have combine those two, you're losing money holding your money in cash because the value of your dollar goes down. And on top of that, an alternative investment, the S&P 500 is up 10%. So let's look at what Dan Nouse thinks for the rest of the year. He expects the stock market to melt up into about Thanksgiving. And he says around Thanksgiving, people are going to realize that people double booked orders in the beginning of the year to avoid tariffs, and their earnings for the third quarter are not going to be as good, or second quarter. So when they're reporting their earnings in the fourth quarter, they're going to show a lack of demand because there was a pull forward, it's called. So he says it's similar to 2021, and then he expects a 10 to 20% correction in the S&P. And that kind of matches right now we're at high percentiles for all the, let's look at these percentiles. He said we can drop 10 or 20%. Rats, where is this? Hold on. Okay, I couldn't find it. Okay, he thinks we can drop 10 to 20%. That could make the stock market a little bit more fairly valued. Okay, let's look at the a couple of charts that I pulled out here that were interesting. First one is the home construction ETF. We noticed we've been following this since it broke out of this long-term downtrend, and we can see that it's in an uptrend. Today, it's going to be up even more over this because we had two stocks that were purchased by Warren Buffett. Let's go back to Yahoo Finance homepage. Okay, so he had two stocks in this home builder ETF that were chosen by him. And whenever stocks are chosen by Warren Buffett, they're basically blessed by him, and the stock market gets the green light to buy them. So we can see that this home builder ETF is now in an uptrend. The what I noted 2 weeks ago was the home builders benefit with lower interest rates, and there's a lot of hints. There have been a lot of hints that the hold on. There have been a lot of hints that the interest rates will be reduced in the coming meetings. So all of that combined um, with Warren Buffett's blessing is going to really help this sector go up. So this is the beginning of a downtrend, and this right here was the start of the new uptrend. Let's look at the AbbVie. There's a saying, the longer the base, the higher in space. We had this consolidation in this zone for over a year, and healthcare has underperformed for 2, 3 years already. And we're starting to see AbbVie, which has a good dividend, and they had a good earnings report recently, and they could be breaking out of this range here, but they are overbought right now. So let's watch that stock. This is the healthcare ETF. You can see that it's been in a downtrend. This is the XLV. It's been in a downtrend for quite a while. It seems like right now we're also establishing this base right here. And a new story like today with UNH could help the healthcare sector maybe break out of this. We're going to see if this downtrend is broken right there. If it is, then we could have a new uptrend for this sector. But right now, it's still in a downtrend. The hard part about investing in the healthcare, anything healthcare right now, whether it's Eli Lilly or Amgen or any stock involving healthcare, United Healthcare, we can see we're in a downtrend. And almost every stock that's in this sector, regardless of fundamentals, tends to follow the underlying sector. So unless we have a breakout from this, it's really hard to invest in um, some of these stocks in the sector. We can see that AbbVie is kind of following that pattern of sideways movement, and we just started a little breakout there. So if we see enough of these little breakouts from some of the bigger companies in this space, it might hint that we're going to break this downtrend, this multi-year downtrend. Okay, so let's look at our stock screen for this week. Hold on. Okay, we can see what I did this week is I sorted by PEG ratio because that usually indicates that a stock is undervalued. And it's you can see if it's a PEG ratio 0.12, it's an indication that it's trading at a huge discount, like maybe an 8% discount or 80% discount. And Warren Buffett would call these kind of stocks cigarette butt stocks because they're down, they're down for a reason. And whether it's a bad earnings report, bad outlook, bad fundamentals. But sometimes the baby is thrown out with the bathwater. And so what I did is I looked at this, and I saw two holdings I thought I would go over. One is Beazer Homes. We went over this a couple weeks ago. You can see that it's like less than half price right now for some reason. And we have new holdings, and they are 13% undervalued. So I thought it'd be interesting. New Holdings was one of the stocks that reported earnings um, today, and they had a really good earnings report, and they're up 11%. So let's look at both of those. Um, First of all, New Holdings, you can see that it's in a sideways consolidation pattern. Again, our saying is Louise Yamana said this. She said, "The longer the base, the higher in space." So we have this consolidation pattern. And one of the most interesting things that I see here is we have this 20-day exponential moving average. Um, the stock is basically kind of hugging the 100-day moving average and just about going over that 20-day exponential moving average. So there's a good chance that and it's oversold right now. You see that's oversold. So that's a good combination with a good earnings report for it to go up. So this is like a breakout time. We'll watch that stock. Next, let's look at their fundamentals. You can see their earnings projections are that they're going to grow 39% from this year to next year. And if they're going at, that's around 40%. So if they're growing at 40%, their PE ratio is 20. You can see it's at 20. Then they're about half price right now. They're a smaller company, but they do payments. They're fintech. So um, I like fintech companies. I have Visa, MasterCard, um, Capital One in my portfolio. So this is an example of a stock that's trading half the price of where it should, and its profit margins and return on equity are double and triple what we're looking for. So the this looks really good. They to describe the company, they provide digital banking platform in Brazil, Mexico, Colombia, Cayman Islands, and the United States. Um, so like a digital processing company, they act as a credit and prepaid card. So they're a fintech company. So we're going to keep our eye on that one. Let's look at another one, the Beazer Homes that was on our screener. You can see that this sector, this stock is following the home builder sector in a little uptrend. You can see it was in a downtrend until like right here in May, where it broke that downtrend. And you can see it's hugging the 20-day exponential moving average, which is the yellow line. Um, and it's in an uptrend. So you can see, and this stock probably will get a kick in the pants with Warren Buffett's buy. Warren Buffett bought D.R. Horton and Lennar in the same sector this quarter. So that will help this stock in the future with sentiment. It's overbought right now. So let's look at Beazer Homes fundamentals. The interesting thing about this is that from 24 to 25, they had a negative 67.5 percent drop in earnings. So right now, I mean, it seems like there's a boom and bust in this industry. The good thing about this industry is there's a lack of supply in the market for new homes. I mean, demand for new homes is high, and the amount that these companies are making are low. So there's supply and demand imbalance, which is good for the home builders. But this is very unreliable. This boom and bust. It went down 67% in their earnings, but they're forecast to grow their earnings from where they are now, 45% and 58% in the coming years. So the forward PE right now is 19. It's growing at 45%. So the PEG ratio is 0.42, which is half priced. Why did this go down like this? It's just the supply and demand. Whenever the interest rates are held high for an extended period of time, there's a lack of demand for housing. That's kind of the bottom line for this company. So these home builders are at total mercy of the interest rates, it seems. Um, so, but their profit margins are 3, which is 1/3 of what we're looking for, and return on equity is half of what we're looking for. So these don't match what were our expectations. But it seems kind of fairly valued right now. Well, it's half price, it seems. So we'll watch that stock too. Um, let's go back to an article we had last week. The biggest buying opportunity in the stock market ahead as Fed cuts rates. And one of these was the housing sector. And it's actually coming to fruition now that, the housing stocks are starting to go back up. And um, and he said small caps. Small caps is actually they've had a rally of like 7% in the last week. They've gone down yesterday. But the small caps are doing better because interest rates will be going down. Um, okay. So let's follow up on this article we had from last week. We had Eli Lilly's second quarter earnings beat on strong sales, but stock dives on trail results. Um, okay, so we had Eli Lilly, a stock we're following that's in a lot of the top mutual funds. They're growing around 36%. We had an article. Whenever a stock drops like this, um, we like to look at what people are saying. Um, Jim Cramer said recently that he's upgrading his Eli Lilly after the CEO and other insiders scoop up the slumping stock. So when the stock dropped 18% in a day, we had a lot of the insiders of the company buying the stock. So Kramer says the only reason why people buy insider buys of the stock is they think it's going to go up. So it's sending a positive signals to investors and everything to do with they believe it's an opportunity to make money. So that's just a hint that it's the sell-off is a little bit overextended. Let's look at the chart of Eli Lilly. You can see it's in this sideways pattern for over a year now. It went a little bit, dipped a little bit down, and it's right back up to this trading range. So we're following this stock. So you can see that the time to buy a stock that's, considered a um, long-term hold of a company is whenever everything is oversold and extended. And it's still oversold right now. It's still trying to work off this 18% drop. Um, but I guess if there's a stock on your radar and it drops 30% or 50%, a way to approach that is to wait a day or so for the dust to settle and just dollar cost into it if you're still interested in it. Okay, let's look at the big article from today. The big article today is United Health stock pops on Buffett's share purchase. Okay, so every quarter, Warren Buffett updates his position in Berkshire Hathaway. Um, it always buys and sells. And this is Warren Buffett's, it could be one of his last buys. Well, no, it's going to be, we'll have to wait for the end of the year for his last buys and sells. Um, but he basically bought Allegion, Lamar Advertising, Nucor, D.R. Horton, Lennar. He sold some Bank of America and he sold all of his T-Mobile. He increased Chevron, Domino's Pizza, Pool, and Constellation Brands. So this is one of the greatest investors of our time. And he also has some people investing with him. So we don't know if it's Warren Buffett buying and selling these stocks or if it's one of his people that are working with him. But I thought it'd be interesting to go over some of these stocks that he bought and sold. First stock I thought it'd be interesting to look at is Domino's Pizza. Um, Domino's Pizza it's only growing at 10% a year when I look at their earnings projections, but it's a consistent 10%. They have a forward PE of 25. That means they're like around 2.5 times overvalued. And its profit margin is great at 12, and its return on equity is around, what is it? I'm not sure. But I'll have to go back and look at that. But its return on equity is good. There, I thought it'd be interesting to go over right now. What are Warren Buffett's reasons to buy a company? What is his investment philosophy? So this is what Google AI told me. They said the first thing is strong economic moats, outstanding management, consistent earnings, and financial strength. An understandable business. This is probably the most common for all these stocks that he bought recently is an understandable business. and attractive valuations. So I think none of these stocks, except for DR Horton and Lennar, have attractive valuations. Most of them have like a PE, a PEG ratio of greater than two. So um, it seems like Warren Buffett, a long time ago, used to have the mentality of buying cigar butt stocks that are really undervalued and um, are very low quality. And Charlie Munger helped him change his tune and buy quality companies that are growing consistently, and you have to pay a little bit more premium for them. So this attractive valuations didn't hold up for a lot of these companies. I think we're going to go over some of them, but Domino's Pizza is an example of, you know, it's pretty pricey, but Warren Buffett would rather buy a great stock at a good price than a subpar stock at a great price, or a subpar stock at an excellent price. That's kind of his mentality. So let's look at um, strong economic moats. Okay, there's a handful of home builders in the country. These Lennar and D.R. Horton are some of the biggest ones. So they have a little bit. I don't think they have that much of a moat, but they are some of the bigger ones. Lamar Advertising, they're probably the biggest advertiser on the side of the road in the country. Um, Domino's Pizza is they have a good market share of pizza sales in the country. And T-Mobile, he's getting rid of T-Mobile, but they're probably one of the best networks for cell phones in the country. Let me see. Okay, so let's look at outstanding management. Understandable businesses. Okay, this is very important to Warren Buffett because almost every one of these stocks has an understandable business here. See, Lamar Advertising, see the sign on the side of the road. It's consistent growth. They're more like a REIT. They have a high yield and they grow a very small amount. You have Nucor. I don't I didn't see a good I don't understand why he bought that one. They don't have a whole lot of there's only two steel companies left in America after US Steel was bought out. So it's Nucor and one more, but I didn't go into that stock. D.R. Horton and Lennar, easy to understand. You build a house, you buy land around the country, you build new houses, and you sell the house. That's an easy business model. The only problem is you're at the mercy of the interest rates for supply and demand of what you're selling. Um, okay, so let's look at Chevron. Easy to understand. You drill oil out of the ground, you sell it. Domino's Pizza, they sell pizza. That's easy. And Constellation Brands, they sell Modero, a lot of um, popular spirits. And okay, so all these stocks seem to pass the understandable business side of things. And attractive valuations, we'll go over that next. Doesn't seem like any of these stocks have attractive valuations other than the home builders. So let's look. First thing we're going to look at is Domino Pizza. You can see that they're oversold and they're at the bottom end of their range. This is a good time to buy it. I don't know what they're doing today, but they're in an uptrend. You can see there's a steady demand for pizza. Um, if you go back a couple, they had a big benefit during the pandemic where people ordered pizza because they couldn't go and visit restaurants. So that helped um, change some customer sentiment in their favor. But they're in an uptrend. You can see that it's a very good chart. And we already looked at their fundamentals. We can see that they're growing at 10% and their PE is 25. So that's 2.5 times undervalued, overvalued. So that doesn't match our attractive valuations. But Warren has been buying overvalued stock. I mean, he's been paying up for quality stocks recently. But this is an example. This stock's going to be blessed from now on as a Warren Buffett stock. So we'll keep an eye on that. Allegion PLC. Okay, they offer door controls, door systems, exit devices, doors, glass, door systems, and accessories, electronic security products, and control systems. So they say have a simple business. I can understand that. Their forward PE is 20. And it says here that they're growing at 7 to 8%. So if they're growing at 8%, the PE ratio is 20. The PEG ratio, you divide 20 by 8 and you get 2.5. So it seems like they're 2.5 times overvalued. So that does not match our attractive valuations. Maybe he bought it at a different time. We don't know. Okay, let's look at let's look at the Legions, look at their stock. You can see that they are in an uptrend. They're overbought right now, and they're towards the top of their range. So it's not a good time to buy that one. Let's look at Lunar. We looked at this 2 or 3 weeks ago. Um, they also had a problem where they had decelerating growth from last year to this year, negative 5%. That's not as bad as um, Beazer Homes, which was down like 40%. But they're expected to grow 16% from this year to next year. So their forward PE is 13. So they're growing at 16% and their dividend is 1.5%. That's a 17% total return. Their PE ratio is 13. So they're at a 26% discount. Their PEG ratio is 0.73. So this is the best that I can find of the stocks that Warren Buffett found. So this is as attractive valuation. They're growing at like 16%. We're going into a cycle of lower interest rates, which is really going to help all of the home builder stocks. And this is one of the biggest ones. This is one of the biggest stocks. So they have a certain moat. Their profit margin is great. That's right near our 11% we're looking for. And return on equity is just what we're looking for, 13. So this is one of the highest quality stocks that Warren Buffett bought recently. Um, but you can see that we've been in this super downtrend, but we broke out of this downtrend right here about a month ago, and we're steadily going up, and this could be like the beginning of an uptrend. And we're overbought right now, and it's going to be way more overbought after today because the stock went up today. Let's look at D.R. Horton. This is another stock that Warren Buffett recently has bought. It has a lower valuation, a 13 PE, and it's a lower PEG ratio. You can see that they had 1% growth from last year to this year. So there's a higher demand for I mean, they didn't have that negative growth from last year to this year like the other companies. They're growing at like 8.8%. So that's 9% at a dividend of 1%. So the total return is 10%. The PE ratio is 13, so the PEG ratio is 1.3. So it seems like they're 30% overvalued. So this is not as good of a stock valuation wise. Their profit margins are decent at 11, and the return on equity is decent at 16. So both of those are acceptable. So this stock is another example of a quality stock that's kind of fairly valued, a little bit overvalued right now. And let's look at D.R. Horton's chart. You can see that right around here, they kind of broke out of this huge downtrend. And this is kind of when they started talking about interest rates going down. And you can see that now it's like in this uptrend and we're at the top end of its trading range and it's overbought. And it'll be more overbought by the end of today. So let's look at our next one. This article, if I could buy one stock, this would be it. This is from the people at the Motley Fool. This guy likes Mercado Libre. Um, they basically say they have phenomenal performance quarter after quarter. The company has long-term opportunities in e-commerce, fintech, and advertising, and it trades at an attractive price. They say the revenue has grown 53% year over year. Gross margin volume is up. Gross merchandise volume was up 37%, and the total payment volume is up 61%. So items sold increased 31%. So they have the largest e-commerce market share in all of its main markets. And so they have a dominant position in their markets, which are overseas. Um, so one of its major growth drivers is its unique active buyers, which has increased 25% year over year, switching from offline to online by creating attractive value proposition for new buyers. Okay, so this is kind of a combination of this company does a little bit of so it's all like Amazon, where they have e-commerce and they're fintech, so they're a little bit like Square or Visa, MasterCard. So I like these kind of stocks that are fintech stocks. So it's a little bit like I guess it's closest to Amazon, I guess, if you could say that. Or maybe it's close to eBay. I'm not sure. Let's look at its chart. You can see it's in its sideways pattern here. Okay, we have another um, stock kind of consolidating in this range. Um, and it's oversold. Look at that. It's oversold and it's at the bottom end of its range. So this, if you're dollar costing into this stock, this is a good time to start buying this one. Um, let's look at the fundamentals for the stock. You can see that its growth from last year to this year is 35%. This year is 40%. So this is very consistent growth, around 30 or more percent. So, but this year to next year, it's growing at 40%. And its forward PE ratio is 46. That's pretty high, but it's growing at 40%. So that means its PEG ratio is 1.15. It's 15% overvalued. So in a bad market or a bad news report, this could easily go down 15%. But it looks like it's consistent growth. And this is an example of a stock similar to Amazon. So they're kind of the Amazon or eBay or Visa, MasterCard for the countries that it operates in. So let's look at some of its profit margins. That's 8.5%. We like 11 or 12%. And return on equity is 43%. That's three times more than we want. They have a little bit of debt, but compared to its market cap, it's not that big of a deal. So it seems to check everything we're looking for. Okay, so that is what I had to say for today. I hope you enjoyed the talk and hope you have a good investing week. I'll see you next time.